So I think there was one very important element of that video that you have kind of sidestepped a few times, was when Chris was asking you how you're managing your $50 to $100 million portfolio.
Okay. First of all,
Welcome back to another episode of the Backholder Pod. So today we have a revisiting guest. So I've went through our archive of recordings, and actually Mr. Lu from 1M65, he's not a new face here. So I went back to check. The last time that we have had him on here was in January of 2023. So that's close to 19 months ago. So that's around 1.5 years or so. So Mr. Lu, how have you been over the last 1.5 years? What are you up to recently?
Wow, 1.5 years. Has it been 1.5 years? Well, that's a long time. And hello, guys, everybody. Thanks for inviting me here. Happy to see all of you. Okay, super happy to see all of you. This 1.5 years, a lot of exciting things have happened. I know everybody, is looking about the stock market and things like that. But in my life, I've gotten more vain, So I try to make myself look a bit better. I did a hair transplant, so I got a little bit more hair compared to 19 months ago, I suppose. Okay. Yeah, so I use a bit more skincare to protect myself. So I hope I look a little bit better. Okay, yes, very healthy now, yes.
Actually, I think in one of your recent interview with Chris from Provident, so you guys have been, I guess you guys are very good buddies and you're joking around. So I think there was one very important element of that video that you have kind of sidestepped a few times, was when Chris was asking you how you're managing your $50 to $100 million portfolio. So maybe if you don't mind, maybe you can share on Backholder as well on how you have been.
Oh, okay. First of all, that 50, 100 million is wrong. It's add one more zero behind. Okay. Yeah. Yeah, of course, crazy. You believe him. Yeah. So, I wish, man. Yeah, I wish. Yeah. So it's nonsense. If you notice in the interview, the number keep changing. So it's one of those house sale number. Okay. Yeah. To be frank, even I also don't know what my number is. So you see, very simple is that people like us in business, we have got some cash here and there that we have to manage across our businesses, but we have got companies that we are running, and in his case, he has got an offer for his business, so how to value his company, right? I haven't got a single offer for my business, so technically my business is, unless you use DCF to calculate it and things like that, my business is worth zero, so it's very difficult to calculate, or at least I don't know what's the value. So it could be anything from zero to any number you pluck from the air. So I wouldn't be too concerned about that number. But most important thing is, last 19 months, I've been very happy. Okay, just very happy. Yes.
So specifically for Mr. Lu, I think over the last 2 years or so, you have been a staunch advocate of the idea of a Kueh Lapis investment strategy, right? Which is to get your safety net of the CPF well, and then layering it up into the index investing, which is S&P 500 and then QQQ. And I think more importantly, you actually, I guess, introduced this idea of a crash buying. So maybe specifically, can we expound on or understand a little bit more about this philosophy? And do you believe in market timing? And how do you came about this whole idea?
Okay, first of all, crash buying and market timing, one is a subset of the other. So let's talk about timing the market first. Okay, timing market means different thing to different people. Okay, yes. Timing the market simply means you need to be tuned. Okay, tune in what? Tune in what is the key thing, right? So there are many types of market timing you're talking about, right? So the most ideal case of market timing is when the market, before a market have a retracement of any percent, okay? Retrace it, you sell. And then when you hit the bottom as the turning point, right? You buy. And then you sell, you buy, you sell, you buy, sell. That's the, like, if you can do that now, then you are the super investor, okay? First of all, Mr. Lu don't know how to do that now, okay? I'm sure some of you know how to do that. Eric looks very smart. He looks like he know how to do that, okay? Bunti, Eric is smiling, so I think he know how to do that. Okay, Kevin is too busy shooting videos, so I don't think he knows how to do that like me also. So Chicken is look like he's going after girls, so I don't think he's not interested in doing that. So my point of saying that is that that's one form of market timing, right? So the other form of market timing is, when it before it crash, right? You June catch a right time, you sell, sell and everything, right? Then you zoom one big crash, and reach a bottom, and you buy, and then the other way around, right? So, and then of course, there are different variant of it, lah. So some people say, you time certain things and things like that. So what Mr. Lu me is is not capable of is everything except one thing, which means that I'm only good in one thing, crash buying, right? I only know how to buy when there's a crash. And I'll talk about it a bit more. So among all the type of market timing, I'm not saying that other type of timing in the market don't work, because there are people who are really very good now, can buy, sell, make money. There are, just not me. Okay, just not me. There are people that really could time the market before the market have huge crash, sell everything, and then when the market reach the bottom, buy everything. There are, just not me. So the only thing I'm very good at, and good in almost nothing else, is to buy when there's a market crash. Okay, major market crash. Yeah, so that's what I'm good at, and I do within what I'm good at. Okay, and keep myself away from what I'm bad at. I think Warren Buffett say it's like what he says. What was the phrase he used? Is he's your own sphere of competence, right? So the most important thing is you must know you must know what you are. Sorry. The most important thing is you must know what you are kiang at, okay, and what you are not kiang at, right? So in my case, I realized I really not kiang in many things. I'm only good in one thing, and I just do the thing, and just do the thing again and again and again. And those things, after I live 50 over years old already, if I still don't know what I'm not good at, I better go slap myself. I think the discipline is to keep to what you're good at and don't go and get distracted by all the juicy, attractive things that other people are doing it. So that's me.
So, Mr. Just curious, right? When you say you know these things, right, which is crash buying, right? What's the, let's say, like the advantage, or what's the things that you know, or what makes you good at this? Is it something to do with you know how to analyze the market, the economy, all those things? Or is it right just from temperament perspective, you know, like emotionally you can pull the trigger, but other people, they do a lot of analysis, but it's the emotional part that they cannot pull. So just want to hear your comment on this too.
Right? You already answered my question already. Yeah, you got all of them there. I don't even need to do it. What you're saying is basically the thing that I have. Okay. So to be able to, first of all, everybody can tell it's a crash. Very few people can tell when it's about to crash. Right. The one you require super foresight. Yeah. I don't have that. Okay. Then maybe let me see whose face looks smart now. Okay, Eric's look very smart. He can predict, his eyes like, wow, the crash is going to come, right? June 3 days before it crashed, and he sell everything. That kind of people have, not me, but when it crashed, everybody knows. You agree with me? Right? When the whole market outside, everybody know it outside. So when it go crash, everybody knows it crashed. Right? Now, usually crash 10% is not considered really a crash. Crash 20% is about there, yeah. Then 30% is what's the kind of thing. So it crash. Everybody can tell it's a crash. Don't need science to do that. You all agree with me, not? Okay. Now the art is then how to tell we aga reach the bottom, right? And then at that moment you have balls of steel to be able to say that kind of thing, right? That part require so first of all, there's an academic part, right? The science to be able to read the macroeconomic signal that the market is turning around, right? And the second thing is do you have the balls of steel to be able to go in and be convicted in that now. So Bunti already got all the answers already, right? So there's some of it I can read macro signals a little bit better, maybe because of my training, because of my interest, because of passion. Maybe I was born the way, whatever, right? The second thing to be able to have the guts to go in. That's where someone that was cheeking was already answered the question just now, right? When you lay your kueh lapis investment structure, so you have a safety net there already, right? So the guts, if you have a safety net there, you're less scared now to go in a bit stronger, right? So I think the other one is maybe I'm born that way. Maybe I structured my investment structure a little bit safer. Maybe a lot of things in my life to distract me so that I just dare go in and things like that, and things like. So it's part science, part psychology. And again, right, not everybody is wired like me. In my case, I know what I'm good at, and I keep myself away from what I'm not good at. Right. So this particular area, I just happen to be maybe a little bit more, of the right temperament to be able to do that. Yes.
Mr. Lu, have you been buying since the end of 2022?
Kevin, I'm waiting for you to ask that question. Okay. You know, you may not know. Kevin and I met in 2022, somewhere around July. Remember, we had this Paragon lunch. Okay. In that lunch, okay, I told Kelvin that the market is turning around. Okay, that was crashing, right? I told you it was turning around, and I actually show him all the macroeconomic signals. Why is there? I give him the signs of it. You know, our Ahia here at the moment look at me, the guy is, 这个金的不, you know, the kind of, he literally give me that face, you know, 这个金的不, smoking weed, you know, 讲什么晒, you know, that kind of thing. Then he gave me that kind of face, you know, and I was really, from the bottom of my heart, okay, I'm really trying to convince him so that he can do a video on it and tell more, because I'm not as popular as him. I know I'm not as cute as him. So, you know, less people watch me. The people watch me are generally ape, you know, my age. But a lot of young people, young girls, young guys watch him. So I hope to. But he was incredulous at what I said, right? So remember, Kelvin, we had that lunch?
Yeah, we had the lunch.
I told him that, I specifically tell him that those signals are turning around right now. I specifically say that those, I think lumber prices are turning around, their prices are turning around, all those things are turning around. So therefore, that's the end of inflation really. The market is going to turn around. But where I'm coming from to answer Kevin's question is that, okay, I only buy during major crashes and I whack big time into it, huge big time into it, okay, until a level I'm comfortable. And then after that, I got no more energy and time and to look at it. So in short, since 2022, I've not been buying until this day. Now, when I say I've been buying, maybe the right word is I'm buying big time. Do I do rebalancing? Yes, I do some rebalancing. Maybe the stock market gone a bit, I trim more to bonds, you know, reallocate a bit. But that's more rebalancing. But in terms of allocating more to it, no, I haven't. Okay, I hope that's a long. I know it's a long lost answer, but that I hope that answer your question, sir.
So in terms of selling, Mr. Lu, how about your selling? Like the buying, we know you buy during crash. How about the selling part? When do you know when to sell, or is it you buy in already? It's just there in your pot forever.
I love it, man. This Q&A has got all the answers that I want to say already. So yes, Eric really told me. I don't think I've ever sold before. Yeah, okay. Yeah, I haven't really sell before. I tell the truth, sometimes I even forget the portfolio I have. Until recently, my son Benjamin became very passionate, interested, and he's grown to the right to start managing his portfolio. He assembled a spreadsheet with all the numbers and things like that. Before that, I don't even know. Then I realized, I think I did a video on it about, I think maybe about half a year ago or something, and I can't remember exactly. I didn't know that in Fund Supermart, I got some portfolio S&P 500 that I totally forgotten for 15, 20 years. Yeah. So that went up by 3 times already. Okay. So that one I sell because Fund Supermart made me irritated because they suspend my account because I didn't trade. We didn't trade, they suspend the account. That's too much, right? But when you want to buy, you're not supposed to trade, right? So I got so inactive that they suspended my account. So I quite angry. So I sold it, you know, and then I allocate some of it to endowers, which I told them don't ever suspend an account just because I didn't trade. So in short, yes, that's a loss. So I think we reached a certain age, you become very lost. So I'm very happy to see young people listen to me. But yes, I almost never sell.
So for your buying, right, it's more for index only, right? Or is it like stocks? Do you actually buy stocks?
So again, one more the conviction. Okay, one more conviction is I have a conviction that okay, sorry, let's rephrase it another way. Okay, I think one of the things I told you I'm pretty good at is I'm very good at reading macro signals. Okay, and these macro signals only apply to macro instruments. Logical, right? So if I apply a macro signal to, let's say, Microsoft, to S&P 500, to OCBC, it may not be that applicable because Microsoft is affected by all sorts of stuff, Facebook is affected by all stuff, OCBC is affected by all sorts of stuff. But when you apply a macro signal, like, you know, inflation index, unemployment, all this kind of thing, to macro stocks like S&P 500, NASDAQ, MSCI World Index, or whatever, that kind of thing, right? It's become more applicable. So in short, the second conviction I have is the S&P 500 and the NASDAQ, okay, who has been compounding since the day was formulated, I don't know, 1990 until now, I think. I don't know what's the 1920 something, okay? has been since its inception. It has been compounding all the way until now. It has been compounding for almost 100 years. I think it will continue. I think it will at least compound for the next 50 years because I intend to live for another 50 years. Okay, I know some of you are quite incredulous about it. Punti don't believe I'll live another 50 years because his face is showing it. But yes, I intend to live another 50 years. I think if you've done for the last 100 years, I hope you'll continue for another 50 years. Okay, so as long as if that conviction comes true that you continue to compound for next 50 years, I just need to hold on, and let it just compound. Yeah. So yes, in short, another law-saw answer to a very good question is yes, I just hold on and just hold the index. Okay.
Okay.
I think initially when Mr. Lee start creating all these videos, right? I think the strategy is very simple. We always talk about CPF and then Kueh Lapis. Kueh Lapis also just S&P 500 and then just end at QQQ, right? But I think recently you have been talking about some other investment. So, one example is that the TLT, the shots that you just fire into TLT, and then you also shared like you make money from those kind of fired, right? That's one. And then I recall seeing you in some videos talking about gold, buying gold, investment, and so on, right? So it seems that you have branched out to all different asset class, different niche, right? Can you just describe to us where does all these new or other investments sit in the overall strategy?
Very good. Okay, first and foremost, having a basic CPF investment structure and layering out S&P 500 and NASDAQ, this is the foundation of 1965, 4165, 1096, or whatever M65 investment structure. I've always been preaching this from the start, day one. Okay, I started the 165 since 2015. I've always been sharing about this. A lot of people thought I'm just Mr. CPF and only Mr. CPF, but it's not. That whole thing must come together. Okay, but it's also a very important thing that very few people catch. What I say was that you should have diversification. You should have some money in CPF, some money in stocks, some money in bonds, some money in other assets, real estate, and all sorts of stuff, right? So that diversification has always been there, and I think I've also said to everyone that even my S&P fund, I think I've 20% of my wealth in it or something like that. I can't remember the exact number because it's very difficult to calculate, but something along those lines. So bonds is something I always have because I've always been trying to diversify into things like that. But bonds, nothing exciting to talk about because there wasn't an opportunity. And I think more importantly is that even sharing, you see, it's a gradual education process, right? In the first, when I started on 1865, the whole of Singapore don't even believe in CPF as investment tool, right? I kena ridicule, kena hood all bakak, left, right, center by everybody. Just siao, talk about CPF, Hong Lim people, how many people they return my CPF. Then once you got siao uncle, the time I'm not so uncle yet, now I'm uncle. The people say that this 政府的走狗, right? Preaching about CPF as a money making tool. 这个笑, right? So those days in 2015, I kena black mark in those areas. But fortunately now, I think more or less that part is mainstream media. People all believe already. I would say, I would even Jesus don't have 100% success in converting the world, So people like me, if I got 50, 60, 70% of people are very happy, which I think 165, the CPF part is mainstream already, right? Then I start telling, once I got that right, then I start telling people, S&P 500 next, right? And forget about Singapore stocks. Now, that was the big one. When I start telling everybody the STI is a super terrible index, I know some of y'all ever get it. I can let overcut again by people because so many Singaporeans invest in Singapore stocks, right? Okay. And I can overcut by people again and things like that, right? But now again, more or less people also accept that STI is really a super terrible index, and Singapore stocks, with the exception of the banks, 80-90% is super bad now. Okay, Eric doesn't seem to be very convinced by that. Maybe he's got a lot of Singapore stocks that make money. Okay, but I think that part has also been mainstreamly accepted. Okay, then we talk about S&P 500. It's also right time because at that point of time there was some buying opportunity. So I wanted to share everybody that in 2020 was the one that I first tell everybody S&P 500 is something good to invest in. So people asking, Simi is S&P 500. Okay, so you need to understand there's a gradual education process. People don't even know, the existence of S&P 500 as an investable instrument. Okay, then I slowly share what is S&P 500 things like that. And when that is over, then I then I share about NASDAQ and things like. So it's a gradual education process I slowly build up for my community, and there was also an opportunity because during 2020 was the major crash, okay, and then and of course if you buy then you make a lot of money. And 2022 was the first time I actually demonstrated short by short. Because a lot of people say, Mr. Lu, you talk so big, you tell us every time, 1 or 2 months later after you fire a short. Because those that I write articles and things that to produce article damn long. So YouTube can, when I fire, I just tell everybody, I fire a short already, right? Okay. So again, right, it's a gradual education process to teach people that, okay, from CPF, you can slowly elevate yourself, like me, to S&P 500 to NASDAQ. So there was opportunity to fire, I fired. But there wasn't really an opportunity for bonds yet until recently, because the spike is interest rate caused entire bonds to crash. Okay. But identifying right now the interest rate is about to turn around. Okay. It's a huge opportunity now for bonds to rise, right? And all of us should hold bonds because you should have a certain percentages in stocks, certain percentages in bonds, right? That's classic portfolio theory, So this is a good time to tell everybody you should hold. I can tell people hold someone. Later, MAS ask me to lim kopi, okay? So I tell okay, in putting some money into bonds, okay, and I do, right? I do. And I bring it now because there's a very huge upside potential. So when I first announced it, the TLT is about 92, 93, 91. Sometimes it's 98, sometimes it hit 99. I think you go up some more. But it's back to very basic principles that money should be allocated in certain places for diversification. Gold is something more, more for fun. That's more because in my commercial side, I sell a lot of gold right now. Okay, I run a business called Premium Mall. We sell a lot of gold. So I think gold you touch and feel very shook. Okay, yeah. In fact, yesterday I just went to Taka Jewelry and sell gold. It's a very nice thing. Okay, part of your nice things in gold, I think is quite nice. I would just say this, that holding gold is a reasonable portfolio diversification, but it's not necessary. But the rest, I think, is more necessary. So I don't think I've done, a lot of talking about gold. Okay, but gold touch very shook. I touched 1 kilogram of gold before in my hand. Wow, the feeling is electrifying, man. Yeah, I feel like, taking a gold bar and run out of the shop, the kind of thing. Yeah, and then let police chase me and see how it feels. Yeah. Again, that's a very long answer to a very, very important question.
1 kilo of gold is around 6 digits, right? If I'm not wrong.
100.
Is it around 100K?
At today's price is probably about 120,000.
Okay.
Yeah, 120,000.
1 kilo of gold is heavier than 1 kilo of feather.
Yes, emotionally, yes.
Maybe I just wanted to think of it. I'll express my POV, point of view, from a young folk. Let's say I'm a new guy, new investor. I'm in my mid-20s, early 20s, and then I chanced upon Mr. Lu, and then I do swear by your idea of crash buying, right? So I just wanted to understand, like, in a way, because we are bringing in a lot of income, and I presume that the portfolio at our age, when we just started, is not big, right? So then if I wanted to model after, like, maybe your crash buying philosophy in a way, so I'm bringing in income month after month, maybe I get a bonus. So I would presume that I have to keep this money somewhere, right? Because I need to wait for opportunities for the stock market to maybe correct downwards or have a buy point. So in a way, what do you usually do for yourself, Mr. Lu, when you get income or dividends or whatever? Do you park it in, I don't know, Singapore savings bond or T-bills, and then when you unlock, then you just throw it in, or you hold liquid cash generally?
Okay, so that's a damn good question. I first of all, everybody must share my conviction that the things I buy compound for a long period of time. If you don't believe in that, then it's very difficult to have a starting point. Okay, and if you do believe in that, so even if your timing is not so correct, that means if you crash by, let's say you crash 10%, you buy, and sway you crash by another 10, 20, 30%. You curse and swear for a few months, or 1 year or 2 years, but the market gradually come back. So not so bad. So the exact pinpoint accuracy in catching the bottom is not so important. I hope everybody realize that. If you catch it right at the peak of before the 2007, 2008 financial crisis, and then the low side went down by 50%. I feel like dying, everybody. But even if you held it, you will recover back. And now, of course, if you held it from that point or peak to now, I think it went up by 2 or 3 times. So it's not so bad, right? So in that sense, crash buying, the risk is a lot less. You realize that? So the need to catch the lowest point is not so important, right? So in that sense, so for me to answer Chicken's question, if I'm having a salary, earn income, keep money on the side, you have got 2 options. Classical investment theory tell you do dollar cost averaging. Okay. I think some of y'all or most of y'all know that I'm not a big believer of that. We can discuss that. Okay. I'm not a big believer, but I'm a big believer of crash buying. Okay. So, keep the money, in somewhere that has high interest. And when the day come, take it out, look, I see, the kind of thing. So it's very easy to execute conceptually. Emotionally, it's not. Okay. Conceptually, it's not difficult, right? Because if the market does crash, even I don't read macroeconomic signal. I just tell you whenever a market crash by 20%, all in and then walk away. I just give you the most magic formula already, right? The market crash by 20%, all in and walk away. The S&P 500, right? If you just adopt this strategy since you reach puberty, okay, until now you see how much money you have made already. So catching the precise bottom is not so important. But in my case, I like to have a bit of fun, so I like to catch somewhere around bottom. Do I have a track record catching exactly at bottom? Almost never. But around the bottom, yeah, I have more success than failures. Yes.
But just curious, Mr. Lu, like in terms of the influence, right? Do you think like which way is the right approach, right? Especially we are trying to influence, trying to teach those like younger, right? Because whenever those young crowds approach me, not many of them, of course, I'm not as famous as you. But if someone asking this type of questions, right, I would just say that you need to at least have some money like DCA. Let's say you can save, for example, save $500 per month, right? You still DCA $100 a month just to have that emotionally to learn about the volatility and so on. So to me, that's the at least that's the right way to teach the crowds, right? But your method is that okay, I'm waiting. I mean, if people can understand 100% of what you just teach, right, I think that's good. The problem is that there will be a group of investors, which I think could be a larger group, right? Is that they're seeing this as like, oh, I need to, the market timing has to be there. If no market timing, there's no extra 10%. Why should I do this, right? So it discourages people, and people play all this market timing too much. Do you think like this is the good influence?
Okay, first of all, Bunti, you talk like as if you're very old like that. Okay. Bunti look very young. Actually, Chiki look older than Bunti, Anyway, so I think what is most important is to understand yourself. What is suitable for you, right? Okay. Like Chicken, these kind of people, very gutsy, Yeah. So he can play crypto, play all sorts of stuff and get high tech, that kind of thing, right? I think Eric looks a bit more like me, okay, a bit more sian, a bit more conservative and things like that, okay? Yeah, I'm just saying you must know what you are good at, what you're not good at. So you must ask yourself, are you suitable for DCA? DCA theory is regardless of market ups and downs, you buy regularly, right? And there are different forms of DCA. Let's not go into detail. But market up and down, you buy, right? Down, buy, up, down, buy. Just keep buying, right? You can ask yourself whether you are capable of doing that, okay? And it's really emotionally very difficult to make a decision every month to buy or sell. Now, of course, nowadays got robo apps and things like that. They will automate the process for you, but it still involves some emotions because when the day comes, you always have the choice whether to stop buy or lesser buy, right? So you still have to make a decision. You have to make decision whether to stop buy, to let the process continue, or to change the amount. So to make that kind of decision regularly again and again, I think it's emotionally very challenging, So I think you got to first ask yourself, are you suitable for that? A lot of people in this time, then they start DCA. Don't worry, I will DCA now. Why did you DCA when the market was down? Why you only start DCA when the market is chonging, right? So my point is that they are chasing bulls. So if I will challenge those people, if you only start DCA now, you can ask yourself when the market is crashing, whether you still got the you still got guts to DCA, right? So, and only you yourself know, right? So again, ask yourself whether you are suitable for that or not. So the young person, okay, that's coming to you, to any one of you, or even to me, I can ask yourself, this is a time in your life when you're young to search what you are good at. Okay. Yes, you should try DCA. Okay. Or you could also try crash buying, or or basically, we maybe shouldn't even touch them and just accumulate your CPF first. Okay. And try a little bit now, $100, $5. A crash buy whack 1,000 now. So right now, I give you a best example. Okay. My son is 21 years old right now. My daughter kid is 23 years old. My son is probably, has a strong passion in this area. Before he went to university, he even worked for hedge fund, speak languages in finance I don't understand right now. He's super good, draw those lines here and there, everything, those Fibonacci lines, psi line, I can never hear before, the kind of thing. They speak those kind of language I never hear before and things like that, And then he go time the market and things like that. My daughter only does one thing. My daughter kid don't know shit about all this. And whenever she hear Papa buy, market crash, that kind of thing, like she just take out money and local. And after that, look at, make sure she takes care of herself, her face, do her own life, go pak tor, whatever. Totally forgotten she has money in stock. So that happens 2 years later. Recently, I asked her, hey, kid, how's your portfolio doing? She said, oh, wait, I checked. Wait, I don't know what's my password. She take about a half an hour to find out what's the password. Things like when market has gone up by 50%. Ben has a track record of doing also expert things 25%. What does it tell you, right? So find out for yourself what you're suitable at. For Kate, very good. She knows what she's good at. She is not good at Ricky Matt. Nothing she's good at, right? When she has money, she just wait for a market crash. How does she know market crash? She doesn't know because she didn't even read the newspaper. She knows it when the father go into a frenzy, and the brother and father go in a frenzy. When the market crash, she just whack inside and after that don't care. Find out the investment strategy that is suitable for yourself. That's most important. At your young age, find out what your DNA in investment is that is suitable to make money. And once you identify that, pursue it consistently and don't get distracted.
I think back to the point about crash buying. So I'm to ask about Mr. Lula. So do you think the market is overvalued now? Because we have gotten some comments that, oh well, Kelvin, you are telling people to DCA. This is a bad advice. So I just want to check. What do you think, Mr. Lu?
Which stock?
No, it's just like S&P 500 .
Okay, but S&P 500 is made out of 500 stocks. Right, some stocks are, some stocks are not. Okay, so when you talk about overvalue, you must have a yardstick, right? Is it PE ratios? You can have an average PE ratio, or is it on based on I don't know, ROE, based on certain yardstick. So in the case of like say a index or S&P 500. When you say overvalue, you're talking about an average overvalue, right? But S&P 500 is made out of 500 stocks, and we all know that the S&P 500 is largely driven by that magnificent 5 or 6 or 7, depending on which one you look at. Okay, and the rest are still lagging behind, things like that. So it's very difficult to tell right now whether Nvidia is overvalued. I don't know. Okay, is Tesla overvalued? I don't know. Is Microsoft and Facebook overvalued? I don't know. It's very difficult because those are growth stock. Growth stock, you can pass me number must be deal, right? That kind of thing, right? So it's just shout whatever number is all correct. Yeah, the traditional boring company, you got some numbers. So in short, it's very difficult to tell whether it is. But what I do know, which I started as a premise to this talk, is the S&P 500 has been compounding over the last 100 years with a lot of volatility. Will it continue for the next 50 years? The answer is a conviction. I believe it will. So the question is, if you believe it will, then if you DCA along this path, then it's correct, right? But if you don't believe that you will continue to compound, then that's a different story, right? And if you choose to DCA specific stocks, then that's a different story. Then that's stock picking, right? Then you have to analyze, left and right. Okay, so I think that's something that it's a difficult question. So specifically, that's why I only believe in crash buying. Because if you crash buy, I don't even need to think about this question. Do you realize it? So by definition, crash buy, the stock market low side, I means it's definitely undervalued. Okay, I just buy it, and I don't need to worry about will it be S&P 500, 5,600 points, 5,000, 6,000, 7,000 points. I don't need to worry. I know one day you'll reach there. When, I don't know, but I don't need to worry, right? Then I just buy in a crash. So what am I doing right now? Clearly, I'm accumulating cash. We accumulating. I work hard. I earn a salary. I run my businesses. So I just accumulate. Then the next time the S&P 500 again, right? Then I just whack down because I would definitely be buying it undervalued. And I do the same thing again. I've done it 6 times already.
Well, since when? 6 times.
Yeah, 6 times already. Yeah, 6 times.
First time was when?
Well,
1987.
2007, 2008 global financial crisis. I did it first time. Okay. Then 2012 Europe debt crisis, 2015 China stock market crash, 2018 US trade war with China. Okay, then 2020 the COVID crash, and 2022 the interest rate inflation interest rate hike that caused the crash 6 times.
Are you not worried that all this, right, like it's just episode of small crash? Because all this Fed talk about, like monetary policies, keep on pumping liquidity, all these things. But this one may not be true like forever, right? Let's say if the entire things turn around and then your crash buying come after market drop 20%, then after that outside another 50%, 70%, 90%, right? Then what happened?
Well, again, right, it goes back to your conviction. Do you believe that whatever happened to the S&P fund or the NASDAQ over the last 50, 100 years will continue? That must be your first premise. If you believe the answer is yes, then you crash by 10, 20%, you buy, or 30% you buy, also never mind. So even if you crash after that, it's okay, right? So it's okay, right? So even you didn't catch the lowest point, you catch it at, okay, let's talk about the worst, which is, let's say you buy the S&P 500 after 2007, 2008, global financial crisis. It crashed by 50%, you can die 60, 60%. If you buy, let's say 30%, and you crash by 20%, you feel like dying, right? Yes, of course, even I will feel that way, right? Then you have the conviction that don't worry, one day you'll recover, right? Yeah, you people say you stupid shit, that kind of thing. Can we use such language in this one? Okay, I mean, you stupid bodo, that kind of thing, right? So, you dumb ass, Mr. Liu catch a falling knife, you stupid shit, that kind of thing. I get that, by the way, a lot during the 2022. Every shot I fire, I kena 50 such comment, right? And no matter I try to be very nice to explain to people that don't worry. I explain to everybody what I explain now, right? So even if I'm wrong, also never mind, because my conviction is that whatever the S&P 500 will continue. That's taken place over the last 100 years. We will continue to take place for another 50 years until I die. Okay, that conviction must be there. If you don't believe in a conviction, then you get scared. Okay, yeah.
Mr. Lu, have you get the questions that's opposite? Like people will say that, oh, you keep on waiting for crash, keep on wait. What if the crash never come? Then hold cash forever also doesn't work, right?
Yeah. So fortunately, the world is unfortunately not perfect. I wish it is true that the market will never crash. Then it continue rise and rise. I also happy, right? Because I'm holding a lot of cash, but I also hold a lot of stocks. So it continue rise, I also shocked, right? Where got so good?
But may not be true for those who just start. I just start out, I have cash waiting for the crash buying, but never come. Then they are not as lucky as you having 7, 8 digits in stocks, right?
Okay, so let's think about it. Okay, so right now when I was young, I cannot remember shit, okay. But since the day I, let's say, graduated, okay, yeah, let's see how many crashes are there. Let's see how many crashes are. Just historically speaking, I graduated in 1997. Okay, 97, I damn swear, come out Asia financial crisis, one crisis already, right? Then 2000, that's 1997. Okay, and then 2001, the dot-com bubble burst. Yeah. 2003, SARS. Okay, and 2003 as another small crisis that very first saw was the Bali bomb blast. Okay, all these have market crashes. Then between 2003 to 2007, I don't remember anything big happened, but 2007, the global financial crisis. Then the rest of crisis I talked about just now already, right? Okay. So within my graduation until now, so it's very difficult to think that you can hold on for more than a few years before the next one come along, right? So if you are fearful, I give you one simple one, right? Every 10% or so you come down, you go whack down because 10% is more frequent, right? But you got to talk about those major ones, 20, 30%, all this. Those will be more rarer, okay? But unfortunately, they do come, and they nowadays come a bit more frequent. Yeah, I thought after the 2000 COVID crash, I think I'll be at least got another 5-6 years of relax. No, next one comes so fast. Yeah, I was like, wow, this is a bit fast, 2000, just 2000, then right, then I gotta go in again, right? Now, if this happens non-stop again, I'll be, the dry powder also not so dry, half this already, right? So imagine every 2 years it happened once. How much can I accumulate over 2 years? Yeah, so I think that's key. So I'm less worried, I'm less worried to tell people that, the crash will never come. But I think, do the person have the conviction to believe all this belief? I'm talking about, again, right, this is last 20, 30 years of history. Okay, so whether you believe that will, maybe the next 5-10 years will be, miracle. The market just chiong all the way up. Fat hope. Sorry. Yeah. I don't think so. The world is imperfect. By the way, as we speak right now, Hezbollah and Israel just launched a war. I thought that Iran and Israel not going to attack anymore. Well, now missile here, missile there, rocket there, that kind of thing, right? If this extend out, then there's another Middle East tension. So my point is, the world is unfortunately by nature a very unstable world, right? So unfortunately, there will always be such opportunity, if you believe, of course.
I think maybe I just wanted to round up this discussion on the. So I think Mr. Lu have been talking about the idea of reading macro, right? I know you in some of the videos you do joke around saying that you're like a roadside economist because you I think your undergraduate level, I think you did graduate at the top of your cohort and stuff like that. You're in the dean's list and stuff. So you have economics by background, but you didn't come out practicing econs as a subject matter expert, if I'm not wrong. So I think on that note, right, do you believe that by you having the ability to telegraph this sort of like economic indicators, knowing when we are kind of at the bottom, not necessarily really the bottom, it's economics a good degree to still study in today's age? And do you think it gives you an edge in trying to know, to become a better investor in general?
Okay, first of all, I am a roadside economist because a lot of times you all see me shoot video, I was literally at the roadside, okay? Yeah, beside some cafe, roadside, because I'm not as professional as you guys. You guys have nice studio, very good video editor and things like that. Until recently, I then dragged my son down. He helped me a little, but the shooting, unfortunately, is still me. So literally, I'm a roadside economist in that sense. Jokes aside, okay, is it possible to read macroeconomic signals without studying economics? I think at least you need A-level economics. Okay, A-level economics, I think it's important. Right? I give you an example, right? When the interest rate, when inflation goes up, why does interest rate usually goes up? Right? This one, a bit of economics does help. A-level economics to do it. No need too much. Is it possible if you don't even have A-level economics to understand it? Yes, it's possible. Go read up yourself. Not everything can read up from Wikipedia. Just more xiong. But A-level economics is enough for you to understand such a thing. But for you to make it a more second nature, then of course some of these economics that I studied does help a bit. They are in the recesses of my mind, never been lost. Even though I'm now, involved in all sorts of businesses and like that. But those skills don't go away. So I think is economics a necessary tool to read macroeconomic signals? The answer is yes, at least at the fundamental level. As I said, A-level economics. Okay, so please encourage all the young people to at least study economics at A-levels level. I think that helped tremendously. Is it necessary to specialize in study of economics to know what I read? I don't think it's necessary, because at a higher level, the things we study, I think, not quite relevant to the things that we do here. Okay, I give you an example. Okay, at secondary school, you study sine, cosine, tangent. Do you remember? Right? Okay. Yeah. Kelvin, look, I didn't study tangent, but I think all of us studied
school.
Yeah. When was the last time you used sine, cosine, tangent in your life? Never, right? Okay. Yeah.
Teaching kids.
Yeah. Yeah. But my point is, you never use it in your real life, right? Then why the hell do we learn all this? None else, right? So in economics at higher level, you learn these kind of sophisticated things. You no use. So, you run regressions, you run, you run matrices, you do DY/DX, no use on this kind of thing. So at a fundamental level, it's probably enough. But because you immerse yourself so much in economics, so when the economic signal comes out, you react faster, that's all. Okay, do you need it? Probably don't need it. Okay, so, but just, I more the case, you read Wikipedia now, okay. So I think the question of whether economics is necessary is probably, at least at a fundamental level, yes. At a sophisticated level, don't need. I think I'll preempt one question which is quite important. Does all economists make good investor? Okay, I think Bunti already answered the question, right, in the beginning of the question, right? To be a good investor, you need more than reading macroeconomic signals, right? Okay. Then you ask yourself, what type of investors are you? Are you a macro investor like me, or are you a what do you call it? Are you a fundamental investor? Are you value investment? Are you in what kind of? Some people use short-term trading. Some people use algos. Whatever. You can ask yourself, what kind of investor are you, and are you good in those areas? And you go into it. So for me, I have some experience in doing that, and my psychology, emotional makeup is suitable for a particular investment strategy, and I just do that. Okay, doesn't mean that other people, okay, will be able to do well in this area, but I can share that my investment strategy don't require a lot of brains. You notice I never go and figure out what's the PE ratio. I have never read any company report for the last, I don't know, 5-10 years. I don't know how to draw lines. Those I don't know how to read at all, and so on. So, but I'm just stick to what I'm good at, and I just do it. That investment strategy of investing in CPF, from financial safety, and then S&P 500 and Nasdaq whenever market crash. I think you can follow that. You will do pretty well already. Yeah, I think pretty well already.
All right. Mr. Lu, I think we have been discussing about all these market crash buying things. Thanks a lot for sharing all your knowledge about it. I think we are close to the final questions already. I will ask the last questions, which is not on investing questions. It's more on parenting questions. How would you teach your children? What kind of advice you will give for parents, right, on how to teach the kids to have this attitude of delayed gratifications?
Okay, no right or wrong in this. So maybe I share my family experience. How about that? Right. I think from a very young age, try to sorry, maybe they are wrong. I will just share some of my family experience, which I think is more important. Is, and if I were to expand your question, how to how to educate financial know-how to your kids. I think that's more holistic financial know-how. So what I'll do is that I'll teach them about about savings, and you must attribute savings as a virtue. Okay, and by savings means have delayed gratification. And next thing is make them work hard. Okay, work hard and save money. And third thing is to teach them the virtue of investment. Right, this will be enough. So at a very, very young age, maybe 1 or 2 years old, I will have this transparent bottle, very big one, very big transparent bottle. Okay, every time I come back after work, right, I purposely accumulated a lot of coins. I'll just give to my kids. Okay, very young age, and I let them just drop the coin into a glass bottle. Okay, it's a very long glass bottle, and then the second came along, third came along. Each of them have their own bottle. So I will just tell them, you can, time to save money. They're all happy because you go down, ding, 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 ding. Then I will give them the coin, and then I'll distribute equally or quite equally. Sometimes it's indivisible. So then they all throw, and they see which one accumulate more. Then I'll tell them that you can take the money, go and spend. Okay, go and buy ice cream whatsoever, or you can put it in and see who wins the competition. Then they realize that, wow, if I go and spend it now, then Coco will win, or Chiche will win, kind of thing, right? Or Mimi will win. Then they start competing with each other, refuse to spend. I brought them to holiday, and I gave each of them $100 during their primary school or secondary school. And I say, you can use this money, or if you don't spend it, okay, you use this money for your holiday, you don't spend it, the money is yours. All of them didn't spend a single cent because they want the money. Because they want the money, right? They want the money, right? So you see, gradually these virtues are into little things. The second thing is that the most important thing is the role modeling of the parents. Here you tell the children, you know, make sure you save money, don't spend money. There you spend money like crazy, you know, run into problem and things like that, right? What kind of role model are you? They see monkey do. It's very, very important. A role model is very important. And last is that teach them the power of compounding. Yeah, if you put in money right now, $1, you'll grow to something, right? So at a very young, dumb age, you know, they don't know anything about stock market, right? So I'll just tell them that, okay, your ang pao money, you know, Papa is going to throw into the stock market for you. Okay, if this graph goes like this, you'll go, you know, the last 100 is going to grow like that, you know, and I'm going to put your money now, your first in my account. I don't even think I really buy for them. Okay, so right now I want you to click buy. Okay, actually buying for myself, but just teach them going to click buy, right? Then they dumb, they think that they actually is their money, you know, they just click buy, right? Then every now and then I'll tell them, wow, your money has grown so much already as S&P 500 goes up. Your money has gone up already. Wow, never. Then I let them play the, you know, financial calculator, not financial calculator, the normal calculator. Always this 1.04 times equal, you know, talking about the one. This is very important. This don't sell this one, okay?
It's a famous
it's
one,
famous.
M65.
It's 1 point. Let's say S&P 500. Okay, S&P 500 8% return, right? times. Second year, third year, fourth year, fifth, second, 8, 9, 10. Then the kids start to develop this game of see who press equal faster. You know, we played the game before, right? Then they realize, wow, can multiply so many times. They're all 20s right now, my kids. Okay, all of them are very good investors. No kidding you. When I say very good, not that they are very good in picking stocks. Not they are very good in drawing lines. They are very good in just saving money, work very hard, use the money and put into the stock market, okay? And then let it compound. That answer your question, I hope, sir.
Wow, great answer. Best one.
Okay, I think.
Yeah, sorry.
Right. Sorry.
No, I just want to say, you know, to wrap up, you know, I mean, jokes aside, loss aside, you know, I think it's extremely important for young people, okay, at a very young age, to first identify, you know, build the basic foundations of investment, right? Basic foundation of investment, you know, to know what is suitable for yourself. You know, try not to be too greedy to go and chase huge short-term gains. You know, allow time, you know, to slowly work in your favor. Appreciate this 4% return, 5% return, 8% return. The kind of thing is very big number in the long run. And once you do that, you save the right money and at the right time, you know, put money into the stock market and the time and compounding will work in your favor tremendously. And you do very, very well in life. Very well in life. I'm lucky at a young age. I met people who taught me this. Okay. And I hope that young people will be inspired by this very gradual but very, very powerful way of investment.
Yes, and I think once again, thank you, Mr. Lu, for coming on to this channel. Hope you guys got a lot of insights from his sharing. And I think this episode was kind of triggered between conversation between Kelvin and Mr. Lu, where Mr. Lu was sharing his 7-digit gains over the last 1.5 years or so. So maybe the next time, I presume, because of compounding, even sooner, the next 1 million, and then we'll get Mr. Lu on again on Backholder to talk about the state of investment again. So with that, we'll see you guys in the next video. Goodbye. Thank you, Mr. Lu.
Thank you. Okay, I'm a bit lost, so
Nice.
can you cut down